Hello dear traders, I'm Maria Starodopa. This is the review of crypto analytics from fx.co. It's the 7th of March today, Tuesday, and in our today's review, Bitcoin continues to consolidate below 23,000 level and what to expect in the new trading week and what two important reports from the US may affect the sentiment of traders in the longer term. And we will start with an article by Tom Petrenko and a technical picture of Bitcoin. So the cryptocurrency market ended the previous week with a sharp bearish breakdown of the 23,000 level, and subsequently the buyers managed to stop the fall near the 22,000 level. However, there was no significant absorption of bearish volumes. However, sentiment analysts note that during the fall on Friday, there was no panic among Bitcoin investors. And according to the social media sentiment, there were buy the dip signals on the crypto market, which also did not lead to a significant change in the situation. What provoked that very fall? Some analysts associate this with the financial problems of the crypto bank Silvergate. And according to the latest information, the company has decided to close its own crypto platform. However, it should be said that the Silvergate situation heightened investor concerns, but was not a key component of the market crash. Other reasons are more important, and now let's discuss them. Let's discuss the fundamental background. One of the key catalysts of the collapse of the crypto market is still the Fed's quantitative easing policy. And as of yesterday, the rate of liquidity withdrawals was equivalent to 0.75% key rate hike. As a result, the investment opportunity of large players are significantly reduced and savings are preferred. In this regard, there is a growing interest in the US dollar and treasury bonds, which show high yields. Also, it should be said that clouds continue to gather over the S&P index, which showed a 28% drop in fourth quarter. And as of yesterday, there is no mass sell-off in the stock market, but a situation similar to the fall of 2022 when US dollar index stifled gains of Bitcoin and S&P could be on the horizon. If we look at the chart of the S&P, we can see that it ended the previous week with the formation of the second confident bullish candle in a row, and technical indicators of the asset also confirm the preservation of bullish dynamics, but there is little room for growth in the S&P. And of course, we remember that Bitcoin and S&P is in direct correlation, and a bullish end for the S&P last week could give Bitcoin the momentum it needs to reconsolidate above the 23,000 level. Over the weekend, trading activity around the first cryptocurrency decreased significantly, and the asset moved near 22,400 level. And technical indicators do not show clear signals for a possible resumption of the upward movement. And also Bitcoin hash rate for the last 2 days has increased by 12%, which in most cases is means that the upward movement of the cryptocurrency is likely. There has also been a decline in Bitcoin supply on exchanges to 2017 levels, which reduces pressure on the price. So, as a result, making a conclusion, Artem says that considering the current situation in the market, we should expect an increase in Bitcoin activity, trading activity, and the development of an upward movement by analogy with the S&P 500 index. Among the nearest targets of the asset, it is worth highlighting the 23,000 level, which is a psychological frontier for investors. Further, the asset will continue to approach the 23,800, 24,400 area, the breakdown of which is the main condition for the resumption of movement to 25,000. However, if we consider the situation over a longer period, then there are no visible reasons for the development of an upward trend in Bitcoin. Okay, let's have a look at the chart for the moment. It's 7th of March today, and Bitcoin opened today at 22,396, and now it is trading at 22,464. Well, so far the situation hasn't changed. Anyhow, the asset is still at the same levels like it was yesterday. It hasn't approached that very psychological level, 23,000 so far. Well, probably the situation will change these days. We will see. And now let's move to another article by Paulo Greco and look at the longer term perspectives. And here Paulo suggests to pay attention to reports from the US which are due this week. They are the reports on labor market and unemployment reports. The non-farm payrolls report has always been important for all markets, but the cryptocurrency market rarely reacts to it. Thus, we can say right away that we should not expect a reaction to it on Friday, almost regardless of its value. Nevertheless, the report itself may affect the mood of traders over the long term. As a reminder, the last inflation report was a mixed bag as inflation slowed for the 7th straight time, but at the same time it slowed only by 0.1%. Immediately, the possibility of another increase in the pace of monetary tightening by the Fed began to grow. And take note that any monetary tightening is a negative for all risk assets. So if we see another strong non-farm payroll or unemployment report on Friday, it would mean that Fed could easily raise the key rate by 0.5% in March. And even if that is not necessary and the rate will be increased by another 0.25%, that is still a minus for Bitcoin, not a plus. So Paulo says that he doesn't see any fundamental background pushing the cryptocurrency asset to rise by 50% and fuel to strengthen further. And to his opinion, the fall is more logical coming from a fundamental perspective, and the start of a new long-term bullish trend is postponed for now, and we need to wait for at least a signal from the Fed about the end of monetary tightening. Okay, this is all for today. And we'll see each other in our next review. As usual, I wish you successful day and profitable trading. Don't forget to write your comments and questions down below. We will be glad to answer them, and see you next time.